Hello, good morning, everyone. It's the Prospero.Ai stock market live stream. Welcome, everyone, on Twitter and YouTube. A lot of exciting topics today. People should be in a good move. Probably the market is moving higher, it looks like, overall. We'll get into George's market view soon. But let me run through some of the topics that we're going to be covering today. If you find these live streams useful and you enjoy them, please feel free to like, subscribe, share it with your friends. But without further ado, let's start with the topics. So, the Super Bowl was yesterday. Hopefully, you guys had a fun Sunday night. There were a lot of Super Bowl ads. I want to speak about one company in particular, which was all over the commercials. So, we'll talk about them and see what's going on there. We had another powerful CEO selling stocks in the past week. So Jeff Bezos sold a lot of Amazon shares, and we'll have George share what that tells us about Amazon stock. Hello,
Hello,
George.
everyone.
Um, we have a lot of big companies still cutting jobs out there. Hey, Joseph, welcome to the stream. Arm crushing it. We'll get into that in 1 second. But I was curious, and we'll have George talk about the difference between Wall Street and Main Street, and if they can both do well, both do bad, how they differ. Next, we had a giant acquisition getting announced in the oil and energy space this morning. Diamondback Energy bought Endeavor Energy, which was private, but they're now the third largest energy company in the Permian Basin. So we'll talk about how that shifts the dynamic of power. A favorite stock of probably a lot of our viewers, Shopify. Earnings tomorrow before market, I'm pretty sure. We'll look at it in Prospero. I peeked for myself and it looked very interesting. So we'll have George look at it later and get his view. And then to wrap it up before the model portfolio update, we'll get into Sam Bankman-Fried. There's developments going on in the FTX saga and what's going to come with his prison sentence and what's going on with the company and the people who are affected by the FTX collapse. And that'll do it before we get into the model portfolio. But hello, George, you got the good camera working again. Great picture, great background.
I know it was a real disaster. I have a table in this house now, Stephen. It's very excited to have a table. Oh wow! I think we need to go one less button down. Uh, Stephen knows the funny thing is like the last thing I do before these is like put on like I'm always wearing like tank tops in the morning. So I do after all the critiques I got for the one time I wore a tank top on air. Uh, that's the last thing I do before these things. I change my shirt. But yeah, a lot of interesting stuff going on in the market today. I think you guys see like why I like every week I'm kind of going, it's working very well. I'm like neutralizing my portfolio. And it's what I'm recommending. It's not what I always recommend, but I think, until further notice, we continue to kind of recommend whether it's Friday or pre-market Monday. It's very hard to odds make this market. Anything you can do to neutralize your portfolio. And we talk about like neutralizing within comfort, whether that's SQQQ or whether that's, other, we talk about SEC, consumer discretionary, not our best time for consumer discretionary, by the way. Like we actually gave a warning that we didn't really want to hold those shorts anymore. And actually today in our model portfolio, we might look to close out more of those. We'll take a look at our whole portfolio rebalance today. I'd like to actually do a pretty long one just because I want to call out the losers on both sides. The portfolio has gotten pretty big and I'm not necessarily feeling that great about my market view one way or the other. So we're just going to neutralize a lot more, which is what I recommend for everyone. Obviously, here are the things I recommend. I pretty much always practice what I preach. Sometimes as we talk about kind of the investing portfolio and the trading portfolio, we get a lot of questions about that. And those are different strategies, right? Stephen, I just want to make sure you sent out the newsletter telling people we launched this, right?
Yep, I sent out the email.
Great. But yes, I think that that's a big thing, for me always, where I'm just looking at, sometimes you might have some different investing and trading strategies. And if anything, I would say I'm probably going to consistently run the investing letter much more neutral than the trading letter. But that's really going to depend week to week. And obviously, in terms of like shorting on short notice, we do get more aggressive with our trading portfolio there. But right now, there's a lot of unknowns in the market. One of the things that we talked about in the newsletter yesterday, like a few of the things, kind of, I would say more on the bullish side. We kind of made a little joke about how Barron's published the same story that we did last night. But of course, the Wall Street Journal, we kind of saw it there, and then we wrote our own riff on it, but then Barron's was behind us. But we make that joke, and it's kind of funny because, like, of course, like that's the job of the Wall Street Journal to like publish ahead of Prospero. But it is still kind of funny that we picked up the story before Barron's, because they have a lot more resources than like our pretty much one person research team here. But yeah, I always think, and I think this is always a good lesson that we kind of preach, no matter how much I believe in the Prospero signals, and I do, really lean on them. I'm always reading lots of different publications and taking in lots of different sources, because like that bull story in terms of the earnings, that made a lot of sense in terms of like what we talk about always in terms of rationalizing our market view. Oh, I totally forgot. I realized I owe someone something. Sorry. I was going to have a guest on today, and there's still time to have that guest, but who might be in the audience. But I forgot to send the actual StreamYard link. So bear with me 1 second. I know I'm a little ADD on these calls sometimes, but I'm just sending this out to our guest because we're going to learn a little bit about shorts today with that. And he's probably wondering why he hasn't gotten an invite yet. He might even be here. But yeah, I'm doing, as I say to a lot of them, a lot of people, I've been doing more and more of these like one-on-ones. And if you want to talk to me about how to best use the Prospero signals, you can always email me at george@prospero.ai. It's a good way to get discounts on our products too. Anyone that I see is, kind of engaging in a learning journey, I'm much more inclined to give discounts on our products to get people exposure to them. So hopefully Matthew does come on, because I thought it would be a good learning experience to start talking to him about shorts. But I would say that, that's the big thing that we're looking at right now. We really are kind of prioritizing, staying neutral, looking for opportunities both ways. And yeah, one of the things that we talked about is like, there's that bull story of like, yeah, like earnings are supposed to be 11% higher this year. So it stands to reason that, not only do we have that earnings increase, but the market tends to perform even better than the earnings increase, especially if it's projecting. Sent you an email, Matthew. You can join soon. We'll get you in the queue of the stories. I think it might be good to go next, because we always like to put these lessons up front. So after my market view, we'll jump in. If you click the link, that'll kind of bring you into the waiting room here, and then we can bring you up on stage. I just emailed you the link. So yeah, I would say that that's the one thing that's kind of very important that I'm talking about. We read other sources. This earnings thing is like, we always talk about having a macro view and a rationalization, right? And I've been talking about, I have no idea what that Thailand said says. How we rationalize the macro view, right? And I've been sitting here being like, and other people like, what's up with this credit crisis? Like, why, like, we keep on seeing this mounting, like, why aren't the bears winning more with that? And there's your answer. Like, the bears aren't winning more because there's this overwhelming positivity in earnings. And just so people know the connection, there's always this connection between earnings and stock market performance, right? Because I could say I'm worried about consumer spending all day long. If those companies are still projecting increases, or enough of the market is still projecting increases, then they're basically saying, hey, our numbers say this isn't a problem yet, or this might not be a problem at all. So that's the connection there, where we're just saying like, okay, like, well, people should start spending less, but we're not seeing it yet. So that's how the market can keep, you could see something like this credit increase but we're not necessarily seeing in the numbers yet, right? So that's one of the things that I think is very important on the bull side. On the bear side, right? Not only do we have that, but we're also seeing this like very interesting thing that is an ongoing story that actually someone who I actually got to meet one of our I actually have an intern that helps me write the newsletter. Galena is very helpful and she's like learning a lot. And I think she's someday going to be a portfolio manager at Prospero, which is pretty cool. We want to bring her along her own journey until she's like making her own portfolio and she's learning. She's taken to it quickly. And then I actually have this really funny story about this guy he's a very nice guy. He took me and my girlfriend out to like a very fancy dinner that I'm very appreciative of. But also I did make him a lot of money last year. So I don't mind if I've made you money, I don't mind accepting gifts in exchange for that. I'm always very open to that. A little less so if you're just giving me a gift, but if I made you a bunch of money, gifts are nice. I'm just kidding. I don't like one of the things that we talk about. But it's funny. We were like sitting at this dinner and telling the story about how we met, and it's a great story in terms of just like the people that I meet through Prospero and like through I think just like a generous attitude of our company where we like give things to people, and I think a lot of people want to give back, and that's great. That's like we don't want people to feel pressure to give back, but we do happily give to people and are grateful when that's kind of noticed and observed. I put a lot of my time into this years and years without people really noticing very much. So the fact that we're helping a lot of people, they're noticing. It's nice to see the fruits of your labor. But anyway, it was very funny because generally people are very nice to me when they email me or they reach out. Sometimes our customer service, I'm still head of customer service. It's tough. I don't catch everything. Sometimes I'm busy. So I do apologize if you ever emailed me and I haven't gotten back to you. It's not intentional. I'm not targeting this. But yeah, anyway, it's really funny because he actually wrote me one of the meanest emails I've ever gotten. He was like, oh, the letter, the content, it's great. The signals, they've helped me so much. You're a terrible writer. And he just goes, and it's just like, I kind of like shrug that off. I'm like, okay, random insult. And then the second time he messages me, he goes, well, you're a terrible writer. I need to reiterate that. But let me help you. Like I'm an 8-time published writer. And so it was really nice. I got on and generally anybody that offers to help with Prospero, I like to hear them out. We got a lot of work to do. And if people want to help, I'm happy to hear about how they want to help. But it was really funny because I was all ready to get on the phone with him and just think of this, like, I thought it was like this going to be this mean person, but Matt's like the nicest guy in the world. And he's got his like doctorate in theology and was like a pastor at like a huge church for a long time. So it just goes to show you how funny it is the way people can come into your life and things like that. Cause like I was like, based on his communication with me, I thought I was going to just be dealing with some jerk when I got on, and now he helps me every Sunday and he's very generous with his time. And it was even really funny where he's like, can we just start running it on Saturday? Like, I'm pretty busy. I have speaking engagements almost every Sunday. And I was like, yeah, no problem. Just tell me that. But it's really funny. That shows like how helpful he is. But yeah, it's great. It's a great story to be sitting there in a very nice restaurant in New York, Gramercy Tavern, and like and be telling like you're adorably. It's just like I wouldn't say I always have like the most interesting like how do you know stories. It's like, oh, this is my friend from college or like whatever, or like, but it is pretty funny to be like, this man insulted me on the internet and now he edits newsletters with me and he's actually here to learn a little more and we're just going out for dinner afterwards. But yeah, I think that's a really great thing about how Prospero is sometimes, in the way that like these people kind of come into my life and come into like the larger Prospero family, and that stuff is great. Much like our next guest. Before we let him up on stage, I do want to just like plot like SMCI. If you guys are on this ride with me, it's pretty amazing. Like what continues to go up. Like it's up 7% again today. Just like no signs of letting down. And I almost dropped it for ASML, and I even talked about this, but I was just like, love that 2026 PE. And some people have talked about that 2026 PE and they calculate it on their own and whatever. Like NASDAQ has a number published on their website they're very plugged into tech. They might have sources in terms of earnings forecasts that are their own. So like people are like correcting me, just like this is how you calculate the number. It's like it's on NASDAQ's website. Like I'm not going to correct them. You can correct me if you want, but I'm not going to correct them. That's where I'm getting it. You can go PE, you can go like SMCI, PE ratio, click the NASDAQ link. It's going to tell you, it's going to put that 0.7 2026 PE. You guys can argue with me all you want. I'm not really calculating that number myself. I am and I could, but Nasdaq has better sources than you and me, and I'm just gonna go ahead. It might like I'll never rule out that it's an error, but I don't assume a financial data company is making errors. Like this is like where you should look in the mirror sometimes. I think retail investors like if Nasdaq has it up on their website, I'm not saying it's impossible that you're right and they're wrong, but the chances are much more likely that they know something that you don't and that they're not just like bad at making that calculation. Possible, not probable. I think there's always those good, always that good kind of thing. All right, shall we let Matthew up on the stage, Stephen? I'm sharing like how do you feel with all these new people joining? Do you feel
I
like your
think
position is getting threatened here?
no, the more the merrier. Let's. I want to build the Prospero community, as big as best as possible. So here comes Matt. Let's go with this so we're all together. Hello, Matt.
Hey guys, how you doing?
And I said, yeah, Matt. Okay, I was like, you put Matt. So I was like, is it Matt or Matthew? So I'm assuming if you put Matt, that's what you want to go by, right?
Yeah, that's all good.
Great. So one of the things I want to do, because I get this question a lot, and like we're actually going to go through and talk to Matt about like what a short is, like what is a good way to put it on, what are some of the benefits, because he's got this like long only portfolio, and I actually noticed that it was like way overexposed to consumer cyclical, or consumer discretionary, right? And this is just something that if you're not in the habit of checking, it's pretty hard, and that's why I like volunteered some of these portfolios, and it was really funny like not only there was there where I was like, oh, that's like way too much consumer discretionary for me, just like right off the bat. Was one thing, especially because we don't really like consumer discretionary. But I would say the other thing that I saw in some other ones is I saw this other person with like Marvell chips and Micron and like all these ones, and I was just like, why would you own those? Like when you can own like SMCI, or even Nvidia, like which I don't like as much, but I still like it more than like Marvell. That is just like the value isn't there as much as these other companies that are just like growing massively. So it's interesting. We look at those portfolios, and it's just like, and it's kind of funny because the person wrote back to me like, "Oh, well, this is just my toy portfolio. Like I invest in like ETFs and saver stuff." It's like, yeah, that's great, right? If this is your high risk portfolio, all the more reason to load up on SMCI and not like fuck around with Micron and like these companies that are just like more on the downswing than the upswing. But anyway, we're going to talk to you about shorting, like why it's good, what the mechanisms are. I'm actually going to start in terms of like what it is, because a lot of people actually don't know what it is, and I'm just going to tell you, and you're going to tell me if it makes sense. You might know. Forgive me if you don't. So a short is actually a loan, right? And we talk about leverage all the time, right? Leverage options are leverage because it's a derivative instrument, and you're levered up in terms of like basically you can lose more than you put in, right? Because like you're long a stock, you can lose what you put in. That's it, right? You start putting in leverage and you can lose more than you put in. Now, that's not necessarily true for a long call option or like buying a put. But the leverage there is the fact that it's like not a one-to-one on your money or a one-to-one on the movement of the stock, right? The stock could go up $1 and or the stock could go up 5%, and obviously you're going to get a good degree more than that. Anyway, what a short is a kind of leverage, right? It's closer to one-to-one, but basically it's a loan, right? So if you short once, like if you short a stock, that's $10, right? And it has like, let's say for a very easy number, right? A 10% borrow rate free on your loan, right? Depending on how risky the stock, that loan instrument is going to have a different borrow rate, right? So let's say you short this stock at 10, you get $10, right? And the stock doesn't move for a year, right? You actually have lost that 10% interest rate. So you have you actually you basically owe that, you owe that interest, or they might have taken it out of your account. Different brokers are different. Basically, you've lost $1 that year, even though the stock didn't move. Now, let's say the stock went from $10 to $9, right? You've broken even because the position gained 10%, but you paid that borrow rate there. Did you follow all that, Matt? Did you know that already? Any questions?
I didn't know that already, and yeah, I did follow it. So yeah, that's clear.
So now we can get into like why I actually like shorts more than put options for beginners, because there is that complexity. And here's the tough point on that. Actually, you buy a put option and you do have that fixed loss amount, right? You can only lose what you spend. But a short, you can lose an infinite amount, right? That $10 short that you shorted goes up to $100, right? You owe another $91, right? That $90 plus that dollar in interest for that year. So, right, that's what makes it tough, right? You do have that higher ability to lose, 10 times what you put in, or 10 plus a little more, but it's not that scary kind of leverage. And I'll call a put a scary kind of leverage because like that short, right? Chances are like a 20% day is a really hard day, right? So you might see that stock go from $10 to $12. You might be 20% down in a day, right? But that's a really tough day. That's not going to happen that often, and you could choose to get out, right? The problem with a put option, right? You could easily lose 50% of what you put in a day. And the stock doesn't even have to move that much. Depending on the instrument that you bought, you could be down that much. That's why I recommend, one versus the other. I'm assuming you follow all that and the difference in risk profile, right? So here's the other thing that a lot of people don't know about shorts. That's really, really interesting. Not only does it control your risk, it also gets you more capital, right? Like, especially in interest rates as they are right now. The thing that I use, because we're always dissing on Cracker Barrel. But if any of you type like Cracker Barrel short borrow fee, right? And you go in and you actually see that it is 0.45 for the year, right? So actually think about where loans are right now. What is the standard mortgage rate right now? Right? Mortgages right now on a 30-year are up to 6.778%, right? So you can get a home secured with a loan for basically almost 7%, right? But you borrow Cracker Barrel and you only have to pay 0.45% on that loan for a year. Pretty nice, right? Pretty nice way to borrow capital, right? So you can short these loans, you can short Cracker Barrel, and then have actually more money to put into your longs. And that's actually what's really good about shorts, because especially in a high interest rate environment, if you're shorting the right stock, you're actually getting yourself more money to buy longs. And like what I love in this kind of environment, right? No one's making you load up on risk, right? You could short stocks you don't like and put all of that money on a low interest loan in Schwab dividend, right? Or Vanguard total return. And you're getting a safe thing on the other side, right? And a very cheap loan. Now, the risks of shorts we talked about, right? And you can it can go the other direction in a day, but like, that's the nice thing about risk management, right? Where if like you're setting it up where you're just like, especially if you're targeting losers, right? So like, let's just say like you don't like Cracker Barrel and you're targeting like these losers in Prospero, right? That have bad just in consumer discretionary, right? You could always short those stocks and go long the consumer discretionary index, right? So you're getting this low cost loan. And then for you to make money, consumer discretionary doesn't even have to do bad or good, right? Just the index has to do better than these losers that you've picked. So there's a great way to like set up the risk management where it doesn't have to be inherently risky, right? It's the same type of thing. You could take stocks that you don't like in the S&P 500 and you could just short those stocks and go long the S&P. There's like all of these things that you can set up that are actually nice risk adjusted things when you short. Any questions?
It's quite a lot to take in. Not right now. I think but I'm sure I will when I've had a chance to actually like digest it, I suppose.
Anyone else has any questions? We have a goal. We're gonna help. Matt's had a nice year, like picking some stocks from Prospero. So he's got a little extra capital to play around with. So we're gonna go on this journey with him where he's gonna start to try overheated.
Uh-oh.
What's overheated? We can't stop with these troubles. Can you still hear me?
Yeah, we can hear you.
Let me see if I shut down the camera and then start it. We're gonna go. I'm gonna let the camera shut down for a second. You can still hear me, right?
Yeah, we can hear you.
So I guess I'll give this camera a little break. I just keep talking. Bitcoin 50,000. Let's do. I know you're not a big fan, but it's up. So here's the thing. It's like the 900-pound elephant in the room. It's like, John, I don't know. I've seen you here and there, right? And Matthew, you can jump if you want. I think it's probably good. Unless you have any other questions. Matthew? Overheated. God damn it.
Does it feel hot to the touch? Can you does it feel hot? Oh, I see. Oh, it seemed like it was coming back for a second.
All right. I'm going to text Tobias. 1 second. I guess we're turning on the air conditioning in here. I guess that's the next step.
Air conditioning in February with snow coming tomorrow?
I mean, I don't know. I don't know what to do here. All right. So we're gonna turn on the air conditioning, I guess. I don't even know if it's gonna work. Or there must be like a fan, right? Oh, I'm gonna open the window. Here we go.
Maybe in our short videos we post on our socials this week, it's gonna have to be me reacting to what you're saying. I'm gonna have to have some good reaction faces.
We're asking for electronics experts here. Yeah, Matthew, you can jump, by the way, if you want. Thanks for coming.
No, cheers, George. Thanks very much, guys. Yeah, I'm still here. Yeah, cheers. Thank you very much.
We're gonna follow your journey. We're gonna get you starting to short. We're gonna have you back to talk about how you're doing and what you've learned.
Brilliant. Sounds good. Cheers, guys.
All right.
Thanks for joining, Matt. Awesome. Best of luck to you.
All right. Here we go. So we're gonna go to the Bitcoin thing. So this is what I talked about with NVIDIA. I'm not saying like you'd be crazy to say that Bitcoin doesn't have potential, right? I'm not saying Bitcoin isn't going to go up. What I always say, and it's not an elephant in the room at all, is you don't know the risk. You don't know the options bets. We don't know anything. There's non-transparent options markets. So I don't know if I'm going to load up today and it's going to be down 15% tomorrow. I don't know. You don't know. Nobody knows, right? So I'm not going to recommend it because nobody has the answer there and nobody can really answer that question well. Like, so if it goes up, like there's some probability of it going up. If you don't notice, I bet on things that have a very high probability of going up and that I understand why they go up and they don't. And I actually have a very good idea of where all of the options bets are being made. And that's what I always talk about. I want to know where those options bets are being made. You can't even see those on when it comes to Bitcoin. So that's my problem with it. And then when you start, that's the short-term problems. When you start to get into long-term problems with Bitcoin, like I know people that say even the Ethereum protocol is not the future, right? They definitely say Bitcoin is like, it doesn't have any real value. It's barely even a fiat and they don't know about that. So like we have the short-term risks of not knowing where the options bets are. And then we have long-term risk of like Bitcoin is priced to be the winner. If something else ever came along to threaten it, it would tank and I would lose 60% of my money like that day. That's not the kind of bets I like to make. I make bets that win and I understand the risk and you see my bets win. So I don't have a problem with Bitcoin. It could very well keep going up. I don't think it's an elephant in the room. I think it's just way too risky. And nobody understands the risk. Not you, not me, not anyone.
While we're on the topic of crypto, I think we should spin right into this topic we have today of Sam Bankman-Fried and FTX, where there's actually some good news that came out for people who lost money in FTX. Since the price of crypto has rebounded, specifically, they called them Sam coins in the article I was reading. It was like Solana. Oh, your camera's back. Bitcoin. Here, let me make you the big guy again. Since all the prices have rebounded, they're thinking that the people who lost all their money or they thought they lost all their money might actually be able to be refunded in full. But what they were also saying is that if that happens, Sam Bankman-Fried could try to spin it and not go to jail since he was able to give everybody their money back, which would be so disappointing to me to see this guy never actually go to jail after he like basically robbed these people of all their money. But if they get all their money back, do you think Sam Bankman-Fried could avoid going to jail?
No, because as I said, there's only one rule there's one rule in the law and like finance crime. That rule is you don't lose rich people's money. Like you could lose poor people money all day long, all day, every day. I'm actually going to pull the camera back a little bit. I think it got pushed forward in all of this. But you lose the money of rich people, and that's a rule you're not allowed to break. So yeah, I think that like that's a pretty important thing. And he's gonna burn for it because that's the cardinal rule. You ever lose rich people money? Like, hey, you could be the Sacklers and like kill a bunch of poor people. That's not gonna end you up in jail, apparently. But you make the grave offense of taking the money of rich people, duping venture capitalists. You will go to jail. There's no way he's not going to jail. But you actually said something interesting where it's just like I'm a big justice person, and I'd love to see her end up in jail. Just because I think you need to make examples of these people. Granted, like I think the selective example making, as I said, I don't love. But hey, anyone that is robbing people should see justice, right? What's funny is like personally for me, if I wasn't going to get my money back and I got my money back, that would be the headline. Like I would just be very happy to get my money back and I wouldn't actually be too worried whether he ended up in jail or not. Like I would definitely trade my money coming back in full for whether or not he ended up in jail. Granted, he didn't have any of my money. I know better than to do bullshit like that I was never in anything but Coinbase, and I got all of my stuff out of Coinbase, like as the FTX thing was collapsing, because that's just my risk profile, and I don't mess around with that kind of crap. But yeah, like hopefully that makes sense, John. It's like not. I build models all day long. I built many, quite frankly, unreliable, like Bitcoin models, and I am a great model builder. So I tend to think, and not only am I a great model builder, I will dig around to find the data that I think my models are missing. The problem is data to build reliable models for Bitcoin doesn't exist. It doesn't mean it won't go up. It just means that we don't understand the risk profile, not you, not me, not anyone. And if you don't understand the risk profile of something, it is too risky inherently.
So we got a good comment about your thoughts on small caps right now. And I remember you were so bullish on IWM like the end of last year into the start of this year, but I think that's kind of switched. So do you want to tell us like your current view on small cap stocks, if they're attractive, unattractive, whatsoever?
Yeah, my current view is that I don't love how this year has developed. Like I would say that that I was excited, for what we talked about. Like I get excited about growth, right? And you can actually see I shared a Wall Street Journal article that in terms of growth multiples versus earnings, the earnings multiples are actually looking more attractive than the growth multiples. It's in the Wall Street Journal. I said I could get into the minutia of it, but I don't think it's worth the time. Just to say basically, and these are my interpretation of the numbers as well, and oversimplifications. But I think right now the earnings is priced more attractively than growth overall. So that's where I'm at on it. I don't think that anyone should be all that excited. Like you should only get excited about small cap growth, like if there's overwhelming evidence that the market is ready to pay for that. And I just think like what we're basically seeing here, especially this like bullish surge on earnings, that's clear that that's the signal that we see people paying for, right? And we should expect them to keep paying for that. That's what soured me on it. Like I actually didn't expect earnings to come in as they have, right? And I'm always revising my view. So that's really what's changed. The earnings have been impressive. Like I was operating under the assumption, and this is kind of what the data saw, that I thought people were more excited about growth. And I thought basically there was a story that I was probably giving more legitimacy to in my mind, that we were maybe going to see some bear movement and come out of it with like a better growth story perhaps in the second half. I think we're leaning towards one of the other stories that I gave, a scenario analysis, where I said actually the most likely one, that we'd have a nice rally and then the second half of the year would be tough. I mean, that's really looking like I said that was kind of the most probable story, and it's definitely like playing into that. But I would say that the main difference is when I kind of thought that maybe the first half of the year would be good. Again, I thought that maybe more of this rally would be, and what we were kind of seeing was in growth. We were seeing like the sector snapback that I was talking about. But actually, this transitions to something that I didn't get to in terms of the bear story. We're actually seeing utilities and energy continue to do poorly. But it's worth watching because February tends to be the bottom of energy utilities. So we're going to be very careful watching that, maybe trying to catch these stocks on the upswing. But yeah, we don't love small cap anymore. We're going to be hammering on this tech and comm stuff long. Like we shared our sector thing, like tech comms. It doesn't matter that it's done well the last year. It keeps doing well in short term. It keeps impressing in those numbers. So yeah, it's like people keep hammering down these losers in energy and utilities, and they keep pushing up these winners in tech and comms. And like, if there's one thing that I probably can't stress enough in terms of the lessons that I teach, it's that if it ain't broke, don't fix it. it doesn't mean like, obviously we're going neutral every week, because we're not going to just be like a tech bull that's just like, hey, tech's gone up, we're gonna load up. And I even thought about doing ASML and SMCI this week, but I very much said I'm not that bullish. Like, yeah, we have these things, but I'm not convinced. Especially with like the softening in SPY net option sentiment. I do want to get a live look at that because I didn't look. We really got, that was a great short thing, but this is going to be a long one, I think. Yeah, 51. Yeah, it opened up. SPY net option sentiment opened at 48. So we're definitely seeing it soften. Let's check out QQQ.
While you're in Prospero, I want to look at another stock too after this.
Yep, but I'm ready. Let's do it. Did I answer your question, Jim?
Yeah, so Shopify, we're talking about tech. Shopify has earnings tomorrow morning. Let's check out how it looks in Prospero before, see if we give people any insights. I took a peek this morning. It looked pretty bullish, but I want to hear what you have to think.
Everyone loves Shopify. Shopify is actually looking great. I get nervous about playing earnings like this because I don't know if it's just like a run up and a rug pull. Like, it's the same kind of thing that when we see like this kind of movement, we talk about all the time how stocks like SMCI can get shorted heavily heading into earnings because people are just looking at better entry prices, or they're shorting it and they have their call options. So we're always on the lookout for that, right? But I would say you can see the reverse, right? You could see like a lot of people buying Shopify, like as they make bets, as they gear up to make cheaper short bets because they actually they're like expecting disappointing earnings, right? So you never know what you see. It's like there's an expression, I think it's in football, called like lying season during the draft. And it's just like, it's on that. Obviously, the market is that on steroids, right? Nobody's ever really telling you the truth. Sometimes exactly what you're seeing could be the opposite. So I'll probably put a Shopify in the model portfolio, to be honest, just because that's like, it's bullish enough that like I want to take a flyer, but be careful, right? And especially be careful with options. Like, if you have a diversified portfolio, you're feeling good about it. Maybe you take a shot at it. Maybe you want an interesting pair trade, go long Shopify and short Amazon. Because we were about to talk about Bezos. I don't know if you want to feed me the Bezos question, but that is a very interesting pair trade as far as I can see it right now.
It's actually super interesting. I feel like we have a couple topics coming up that relate to this, but the one question I want to ask you, because Shopify looks really bullish, but it also has really high short pressure. So would you expect a move up or down? Would you expect earnings to be volatile in one way or the other? And would you be surprised if it was just like no movement on earnings? So essentially, like, it could go up or down a lot, but you'd be surprised if it stayed in the middle.
No, it could go any which way. Like, I can't, just for like my record as an options trader, I can't tell you how many times I've been burned playing both ways, like on options heading into earnings. Because keep in mind, like, there's a concept called implied volatility, right? And the implied volatility going into an earnings is going to shoot up and then lower right after, because like the possible movement, that's implied volatility, is way higher heading into earnings. So if you're long, it's not a bad time to sell options both ways. That's a little bit harder of a tactic, though, right? Yeah, it is very, very hard to buy both ways heading into earnings and betting on that, because you have to have a big move. And like, oh, my window just closed itself, both of them. There's no ghosts up here. Sorry, everyone. I thought the ghost, maybe the ghost, maybe it's more likely to have ghosts in the sky, to be honest. I didn't like that. Hopefully the camera doesn't overheat now. A lot of interesting things up here in the sky. So yeah, it's very hard to play it that way. And honestly, I can't tell you how many times I've been burned straddling or like going both ways on an option. So like, it's easy to lose money on that stuff. But that's why it's nice. That's why it's nice to go, maybe long Shopify and then short Amazon, because you're covering your options there. That's a different kind of straddle, right? Where you're getting the upside of shop. And then if they have terrible earnings, like that's probably going to hurt places like Amazon too. So you'll get that. And then the other Amazon story that is, I think, a great reason to short right now.
Yeah, so maybe if Amazon goes down, we'll know what Jeff Bezos was thinking, because he just sold 12 million shares of Amazon, totaling over $2 billion, and he actually is filing to sell up to 50 million more shares. So he seems to be going pretty hard in selling Amazon stock. So I guess we'll know tomorrow morning if he knew something before we did.
So I mean, look at Bezos. Look at Amazon right here. And I love Amazon on a company. Like, we're talking about 53 upside breakout, right? Not that high downside breakout. It looks good in the things, but it's just like, why aren't institutions betting on it long term? This is when we bring it back to PE, right? You go back to PE and like, it's crazy. It's trading at a 2024 PE of 43.29. 2023 actual PE of 61.43. Compare that to Tesla. Tesla's a little higher now. Oh, I mean, they graded. I mean, compared to, I think Nvidia is the better comparison, actually, right? Nvidia is, well, it's gotten pretty expensive. These things have gotten expensive, but
I think I saw today that Nvidia passed Amazon in market cap.
Yeah, but like, check this out. Nvidia is at a 65 PE, but it's growing at an insane rate, right? It grew 206% last quarter, right? And Amazon last quarter, I think grew at maybe quarterly results. Here we go. It grew at earnings release. Yeah, 14% compared to 206 for Nvidia, right? So owning Nvidia at a 65% 2024 PE, like, versus Amazon growing at 14%, that's how you start looking at Nvidia as like a discount compared to Amazon, right? And that's why you see it at a 53 upside breakout. Institutions just don't want to do it. But back to Bezos, right? Bezos is a sharp guy, and we talk about this all the time. It is a bear signal when someone like Jeff Bezos sells his shares. It's a bear signal unequivocally, right? He's a smart guy. He needs no access to capital. He can get loans on top of loans on top of loans. Anyone that says like, oh, he needs to buy a yacht or whatever, untrue. Like, without selling those shares, he could buy any number of yachts against the value of those shares. And you actually, in order to sell those shares, he pays taxes on it. So he's paying a high price. He doesn't have to, because you get tax breaks on loans, right? That's why entrepreneurs, everybody kind of gets picks on them. So he's actually taking something, a loan, that he can get a tax break on, and he's turning it around and selling shares that he has to pay taxes on. The only reason he would do that, Jeff Bezos believes the stock price is going to go down, and there's no other way to slice it than that.
So I want to add even another puzzle piece to this story, and maybe we're figuring something out here before the market is. But so I was watching the Super Bowl last night, probably like everybody else watching the stream, and I was shocked when I saw 3 ads for Temu, which is like a Chinese e-commerce company. And I was reading a little bit about it today. So they're the 3rd highest spender of advertisements in the United States, behind Amazon and Meta. Those 3 ads totaled over 20 million for $20 million for a minute and a half of ads yesterday. So they would only do that, I feel like, if they saw an amazing opportunity or a weakness amongst Amazon and Walmart and the leading e-commerce companies in US. Like, why else would they be going so hard on spending, and 3rd biggest marketing spender in the US, if there wasn't like an amazing opportunity?
So I'll tell you what I like about Temu. I like that it does a little more like kind of product highlighting, right? Bringing you what look like interesting products. Like it's a different thing than Amazon, right? Amazon's the everything store. And like actually what I love about Amazon is like, I just recently buying furniture and my girlfriend like loves to go to all these little things, but all my shit is here. We still don't know like the stuff that you order on Wayfair, like when it's coming. Like, and you don't even get good communication on that. They delay these things. Like it is, I'm not saying that, Amazon's great. There's negative things about them. Some of the time the product quality is, but they have a great return policy. What is challenging sometimes for me, and like Temu does this well, is like it has cool stuff. It gives you ideas of what to buy. Amazon, I'd say, isn't as good at that. Amazon is just kind of like Amazon more is like, oh, you look at this, you might like this. It's just like it's giving you a lot of related stuff. That's a data science strategy, right? It's not a bad one at all, right? But Temu's got an interesting business. And I would say one of the other things about Amazon is they've just gotten so big that it's hard for them to keep finding areas of growth. Like AWS was a big area of growth, but as you get bigger and bigger, right, it's harder and harder to find businesses that move the needle because they're so big, right? And it's just like, it's not like they're NVIDIA where they're just like, these demand for chips are crazy, 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 right? And they're going to keep going crazy, right? It's just like Amazon, they've already got me spending about as much money as I could possibly spend, to be honest. Like I probably spend too much on Amazon as it is. So like, I think that's a comparison. Like I think most people that use Amazon, a lot of them have converted to buying like a lot of stuff on Amazon. They don't have that because it's B2C. They don't have that same, like AWS is obviously B2B, but they don't have that same like NVIDIA, like everybody's going to buy to like the appetite for chips, like easily any of the companies NVIDIA can deal with, double, triple, quadruple their spend. Like that's just not happening for me. And I moved into like a nice new apartment, right? I'm still not going to double, triple, quadruple my spend on Amazon. I just don't have I don't have those kind of resources, nor the desire, right? So I think that's a big difference between those businesses. And we kind of like broke down for you like why, like the business case for like why you should be concerned about Amazon and how overpriced it is potentially. And clearly Bezos is.
Yeah, I think we'll continue watching, and it's going to be interesting because it's going to happen tomorrow, and we'll see if Amazon reacts to Shopify. We have a question from Michael Rogan about SWX. It's up 2% today, and he's asking if he should still enter short or change. There's been a change of thought.
I mean, Michael, it's got a 15 net option sentiment, right? It opened at 29. I think yes is the answer. Still time to enter. Maybe even a better entry point. Is it necessarily going to be right? It's tough, right? Because we've talked about like this is the time that utilities start going up. This is the time that energy starts going up, right? And we do see the utility sector up like 0.83, right? We do see the energy up 1.12%, right? So might be a bad time for any utilities play, right? But the number's still like if you're looking for a short play, it really depends on what you're. Oh my God. Overheated, shut down. How many more topics do we have, Steven? I might just move to my other thing.
Yeah, we just have one more topic. So if you want to transition now.
All right. I'm going to relocate. Do you want to just, actually, why don't you type the topic into it so I can read when I sit down and then you can tell people.
All right. All right, everybody. If you want to also comment questions for George when he comes back, because we're going to go. Your question overheated, George. Yeah. We're going to go into the model portfolio after this last topic. So we won't be answering questions as much, but the last topic is going to be Main Street versus Wall Street, because I've heard before that people believe that they can operate independently, and we've been seeing layoffs. So when I asked George if he believes that that can be true, or like how long can that play out before one of them, causes the other one to move, and how connected those things are. Um, it's been a doozy of a stream. Camera going out, Matt joining us in here. I missed the Amazon point. I see it's on long term and short term, but what's the point with Shopify? So, Spiky Dude, we were talking about how some people like to straddle options. So we were seeing signals in Shopify that may lead someone to believe that there'll be a big earnings reaction tomorrow. They report before the market, and George was saying that he's lost money straddling stocks like that, and that a better play would be to go long Shopify, and if you want to have a hedge, go short Amazon as well, and you could get your exposure that way instead of just straddling one stock. Yeah, Wolf, thanks for joining. I saw you pop in before. Any questions? Any questions for me while I'm the solo act up here? The solo face of Prospero before George gets back? Please no comment or questions about AMC or crypto. You're going to get George going when he starts his model portfolio. The king is back.
Hold on. Anything new to go through?
No, I answered. We got one question about the Amazon point, but I answered him, I believe.
Well, did you clarify? What am I doing on Valentine's Day? Well, that's actually pretty funny. My sister has asked for a birthday dinner. I have a very exciting talk I'm going to give at Berkeley on the 20th. And so what's kind of funny about that is that my sister has decided and my parents are in town. So Valentine's Day, my girlfriend and my sister and my parents are all going out. I think out. It might be at my parents' house. So yes, not your traditional Valentine's Day, but I am. My girlfriend and I the next day, I guess when we're celebrating, we're gonna get Korean body scrubs. That's what she wanted to do, and it sounds interesting to me. She says people feel like new people after it. I gotta go to the bathroom though. I'll be right back.
No problem. Yeah, Wolf, unfortunately, I do not have a Valentine's this year, so I'll probably be sulking on my couch alone, maybe watch a movie or some sports, but, we move on. What are you doing on Valentine's Day, Wolf? Are you in Poland, by the way? I think I saw you comment that Temu's gained traction in Poland. Is that where you're located? I hope we have an investor mindset. All investors in our chat. I hope nobody's bet too much money on the Super Bowl. I'm sure the sports books made a killing yesterday with what was going on. Seemed like every other commercial was like a gambling. I mean, it was located in Las Vegas, so tells you all you need to know. But yep, in Poland right now. Cool. What time is it there? I'm gonna guess it's like 4, 5, 6 o'clock, somewhere around there.
It's funny. I look at me with my Amazon sparkling water.
Amazon sparkling water?
I do have more money to spend on them. I do want to figure out maybe at some point, I think I want to get the angle because when we had the shorts on this thing, I hated having this and I can have this. I got to figure out a little different angle for my desk, I think.
Yeah, you just become a little dark. I think if you
I definitely need a different light. That's a good point. But actually, why not? Why not bring that light back in here? Hold on. Let's get that light. Sorry, guys.
1800, yeah, that's military time, right? 6 p.m. That's more my style. That makes it clear. Hope you're enjoying Poland. Spiky Dude, when it comes to sport, I'm 100% conspiracy theorist. So you think the Chiefs were written to win early? Merle Kalis, and what exactly is wrong with spending Valentine's Day with your mother and father? I'm sure George will react to that when he comes back. Nothing wrong with that. No problem at all.
More questions, or are we just waiting for the portfolio?
Oh no, you got a question, George. You got a good one.
This question.
It's from someone, first-time commenter, Merle Kalis. And what's exactly wrong with spending Valentine's Day with your mother and father?
Well, I see nothing wrong with that, but my girlfriend, wanted to spend, as a girlfriend might, actually, wanted to spend Valentine's Day with me too. And maybe not with my parents, but that's okay. That's okay.
Yeah. The only other topic I had before we go into the model portfolio, which is if you could just explain the difference between Main Street and Wall Street, and if one can do well while the other does poorly, and how connected those two things are.
All right, how are we doing here? Are we more lit?
Slightly.
Not that great. For all the light stuff, it's not that great. Oh my god, that's so funny that my mom commented. All right. I think we're ready. Okay, I have something. Okay. We're getting this all set up. We're going to do filter. And then we're going to check. Well, I'm actually going to update or take a look at the sectors, which will get me kind of more of like a 2-day and like a 1 week plus. We'll take a look at that because I do want to see if there's any update to this, like the extent that like the energy, blah, 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 all that stuff, that we might want to relook at. Definitely that.
Yeah, if I'm not wrong, didn't you say earlier that like today could be a big change if of the model portfolio or no?
Well, I definitely want to. Oh, energy is down since. Yeah, but it was down a little bit more. I definitely want to, and we can just post what happened last week. I definitely want to like as I mentioned, cull down the position. So I do want to take a look at, I'm going to look at the sector readings. We got some work to do, but we only have 26 minutes until I have a visitor. So we're going to try to maybe pack a lot into a short amount of time. But we will try to do as much of it as we can. All right, we got that. We're pulling up our filter. We're looking at that. We're getting our model portfolio ready to see if we are closing out. We almost crossed 50% on the model portfolio, but we went backwards. And we have this new long and short tracker. That's cool. Yeah,
for our viewers in here, if you're not subscribed, 13 away from 900. So click that subscribe button right now if you enjoy these streams. Let's get to 900 before the end of the week.
Yeah, so I'm actually looking at this new tracker sheet that that my one of my portfolio assistants, Brent, who had some good ideas on this, helped me put together. That is going to kind of show me like what. Oh, did it? I think it did update. I closed one of those positions. Did Brent get that? That would be great. Good job, Brent. Maybe. Yeah, look at him go. What, 1-8? Never mind. I don't know what's going on here. We're back to the model portfolio, right? So instead of what I normally do in looking at it, we're going to look at this should be that, right? So we're looking at it, and look, we've got a nice little handy dandy thing that tells us now. We dropped this, so we don't have to worry about that. But we do want to look at pen here and what else? KXIN. MA is orange. You see how easy this is for us now? Like Penn's got a lot of concerning stuff. So let's start with Penn. This is looking great. Very, very helpful. Look at us go. Wait, what is this? Ugh. Did it like change me into light view? I do not like this. Oh, thank God. That was horrible. All right, let's look at Penn. Oh yeah, we're definitely getting out of this. Thank you, new system. That made it pretty obvious. Mm, mm. Oh, I forgot we sold all of booking. VLY. See, sometimes I even forget what we do around these parts. We're getting the hell out of Penn. Anything else? This makes my life a lot easier. Mm, we definitely want to look at this. Oh, TDG has gone into negative. See, this is not good either. Rope, SAI, this is really helpful. Let's look at Rope. Who knew? Who knew its downside and went, yeah, we need to get the hell out of Rope too. We might not even need to do the old way where we look at a bunch of stuff. This is very easy now. Look at us go. Look at us make our ongoing innovations, right? So any of these negatives too, we want to like. Pen is a negative, right? We care about that. FCN, CN, what's going on with that? It's good on a 1 month. Let's see. Yeah, it's doing good enough on this 30 minutes, but let's look at the 4 hour. Oh, not good on 4 hour. Okay. Now let's check. That's the one thing we don't have that I don't love. We do now have to go back to this. It's a win. Is it a live win? Yeah, I think we might just want to get out of this on our own, actually. I'm just going to exit. This one we're not even going to exit. 1504.93. Yeah, I just want to get out. I got on to get the hell out of this right now so we don't lose that win. 503. 503.20. All right. Sorry, everyone. Just locking in that win. We take the wins where we can get it. All right. We don't like that overall trend, so we're getting the hell out.
Spiky Dude said he joined the Discord and the whale tracker is really cool. He likes that feature.
Cool. I'm glad you like it. No, maybe we just want to exit all of it. Whatever. We're just going to get out of this one. We want that win. I love this. I love this. I don't know if anyone's ever seen the best Christopher Walken, who I met. He's very nice. But he's got this really funny like census like taker thing where Tim Meadows is like interviewing him, and he's got this like crazy line where he's like being asked how many people live in his house, and he's just like getting it wrong, and he's like, this is really important. I want to win that car. There was no car ever mentioned, and it's just silly because I kind of think about that when I'm doing something, thinking about something ridiculous and just without a context, just like that line. Oh, we did BLD was definitely. That's what I think to myself. Like, I want to win that car. Okay. Oh, MasterCard. Let's see what's going on with you. You are looking concerning. No, that's fine. You got a nice 30-minute trend. We need not go further. I'm not really dying to get out of any of these. Ooh, Apollo, no, we just got out of some other stuff. We're not ready to get out of Apollo yet. ODFL, MPWR. Oh, we kept two nice positions there. Good for you, George. That had a nice win last week. Oh, it might be time to get out. Well, I'm gonna get out of one of them. Take our win. All right, let's just take some profit. We don't need to get greedy. We're definitely trying to get some of these positions down. MA, anything else? We got some yellow. We got two nows. We got out of TGG this morning. So let's see if let's check out these nows. Oh, do we want to get out of both of them? I don't like that now trend. We'll get out of one of them. And basically what I'm seeing there, guys, is like it's the short-term trend is not good, but the longer-term trend is good. So we'll balance that out. We'll just be a little conservative and we'll kind of meet in the middle. All right. Anything else now? UNH, I think we want to keep because I like this upside downside flag being high. KXIN is always very interesting. Apollo. Oh, let's check out Adobe and Apple. We might want to call one of those down too. Yeah, you might want both of those out. Actually, I don't like what's going on here. Let's just look at the daily on Adobe. Yeah, I think we want to get out of both of those. But maybe not. We're going to check on two things. We're going to check on net option sentiment trend. Do you actually want to tell me what you see on net option sentiment trend on Adobe, Stephen?
Sure. Net option sentiment trend on Adobe is downward. It's at 72 right now. Opened at 71, but it's on a downward trend. Definitely.
I hate having two losses. We're going to keep one. We're going to keep one. Oh, it's just doing so bad, George. It's just not. I just want to see if there's any help. No, we got to get that. We got to get this. It doesn't matter. We're going to take the two losses. We got plenty of wins. We're not going to be stupid about this. Can you tell me when earnings is for Adobe? Did they have earnings already? I'm looking for any excuse.
No, they have earnings March 14th.
See, Apple is at least in an upward trend. Let's see how we're doing on Apple. Any wins? We always lose on Apple. Yeah, always. Goddamn. I don't even know why we do this. I'm gonna hold on because it's actually in a good longer term trend, but your days are numbered, Apple. I'm watching because you always screw us over. I don't know why I ever trust you. Okay, that's all. That's all for our longs. Let's take a look at short tracker. Oh, I love this. I love this new long tracker. Brent did a great job with this. Really did. Makes it real easy. What's going on with Wish? Whoa! Well, well, we'll hold Wish. But we might play Shopify now. We saw how good Wish did. Oh. I think it's time to get a SQM. I think we're still profit. I hope we're still profitable on that. We might be behind. But if it's close, we might do that thing where we get out quickly. Oh no, we're very profitable. But it's time to bail. I thought we were. It's a nice. We're getting out of all of our Adobe. Sorry, everyone. All you Adobe fans. Oh, we decided on. Oh no, we're holding. Are we holding Apple? No, we're holding. 1, 2. We're getting overexposed to that. Yes. All right. Now we're looking at. No, I just exited out of the very thing I wanted. The very same pants you were trying to return. If anyone knows that one, I'm not going to bore you with all my references. If anyone knows that reference, I'll be impressed. The very same pants you were trying to return. How's MGE doing? Because we should get out of that. That's short. We cleared out of it. That's all. Nah. Yeah, we're gonna get out of it. Oh, MGGEs. The great culling. Okay, back to this. Our new short tracker. Thanks again, Brent. Wern. I feel like Wern. We were wondering if we. Yeah, I knew we were wondering if we should get out of that. Yeah, we're getting out of Wern for sure. We didn't learn our lesson there. All right. Oh yeah, Voyager, always with the Voyager. We get into Voyager, we get out of Voyager. I'm sure it's going to be ranked on our filter. Oh yeah, it's very, very bullish on this. Let's look at the 4. That's enough to get us out. I think. It's a loss. It's still enough to get us out. We've had some wins there. We don't need to be greedy. Oh, it's nice to clean up all this. It's always nice to clean up all your positions.
Early spring cleaning.
Yeah, it's just like these things start to take up room, and they might not be any good anymore. So it's best to want to do ones that we like better, 30 minutes, 15. How are you on the 4 hour? We're actually out ahead of that one. Great. Oh, I can't tell you. This is like such a joy, this new thing. It makes it so much easier. It's just like way, way easier. Oh, we definitely want to look same thing that we looked here for any pluses. Any pluses. MQ. Yeah, here we go. What's going on with you? Wait, what's going on with MQ net option sentiment? Still pretty low. But we don't like that upside to downside breakout ratio. We don't like it. Oh, God. Well, we could have seen this one coming, George. It's definitely time to get out. Is that earnings? To buy. Yeah, we screwed the pooch on this one. Did we still make money on it? No, we don't have time for that. We just need it. It's just time to get out. It's time to get out. We don't want it. We don't want the risk. Yeah, let's look at any more of these pluses. These dastardly pluses. Hasbro. Hasbro is always screwing me. I don't even know why. Steven, this is one. If I talk about adding Hasbro, just tell me not to. I just don't know why I do it. It never works out well for me. It's just annoying. What actually was it going down? Did I see it going the wrong way? Can you talk to me about the net option sentiment trend on Hasbro?
It
Oh,
is at 45 right now, opened at 33. It's got a neutral trend. It's kind of just bouncing between 50 and 20.
No, we can actually get out of Hasbro at a win. So we are running to the bank to take our Hasbro win for the first time. We finally got it. Score one for the good guys. Just always being a nightmare. Team. Yeah, you're looking like a pain in the butt for us. Let's check the 4 hours. Oh yeah, IRT. It's time to head for the hills. Oh, great. This is some great spring cleaning. Spring cleaning. We have 2 iClicks, so we're good there. NOS, AMN. AMN and CHK are definite candidates. AMN. And then we're almost done with all this spring cleaning. Okay, yeah, definitely. But what about, let's look at it like an hour. Yeah, this is getting worse. How did this get so bad for us? I mean, it looks good in the signals. Why are you even doing this, George? I don't know. It's kind of cooling off. I want to keep watch on it, actually. I just don't. It's done. Well, actually, let's see if we're profitable. Let's be smart. No, it's a loss. We're gonna watch it because it's that 5-minute trend. We might even check again and see if things have reversed. But tell me about the net option sentiment trend on AMN. Then we have one more thing to look at, which was CHK. And then this is really nice.
AMN currently at 58, opened at 29. It's at the highs of its trend right now.
We're just no reason to mess around with this. All right, can you talk to me about can you talk to me about the mark QQQ SPY net option sentiment?
QQQ is at 55 and the SPY is at 51. So that's a change. QQQ is above the SPY.
All right, here we go. Now we are going to, we're just going to do a quick scan, especially for, I think for new shorts. I think we want, especially tech shorts. We want to see if we have anything new. So we are going to do our normal thing that you guys are well aware of. But we are going to do one more. We are going to just do a quick sector lookup because we are very overexposed to tech, as a lot of people are. No, I haven't. Why am I being so difficult? We're going to do a little trick here too. We're going to copy and paste the values. So now we can move this on the other side. And it's not going to ruin our copy paste when it comes time for. All right. Flexibility is here. Growth is here. Got this, this, plus this, 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 this. This is another really good update, Stephen. A lot of good changes to the portfolio. Wait, what's going on here? Well, I guess meta got delete. Wait, what? Should we sort? No, we didn't sort this. There we go. Let's look at all the tech at the top. I don't know if we have an ANET open, but I think we do have. Oh, we've got some interesting things. Microsoft. All right. Let's check out. KLAC has been on a nice little run, so I do think we're gonna add that one. Maybe. But we are gonna look to short some new tech too, especially if we do this Datadog thing as well. How are you looking there? That's great. Short on how are we doing on the 4? No, I think we're gonna do both of those things, but we're definitely gonna look for some new. How's SWAP doing? We always find that interesting. Shockwave. Oh yeah. We're still getting it. We find it interesting. We always find Shockwave interesting. Okay, let's see. Let's go on this filter. How many do we have? 13. So we need to govern this a little bit. We're gonna just do the thing where we delete beyond a certain number. We just want to get Shockwave. Oh, into it. I don't think we did. I don't think we added it. Can you see if we added it at the end of last week? It should be pretty close to the top, Steve. I do like what's going on with Intuit, I think. No, we don't. Maybe. Well, can you tell me what's going on with Intuit net option sentiment?
I didn't see it in the top of the model portfolio. Intuit net option sentiment at 78 was at 75 this morning. It's at a high, kind of neutral trend.
I'm convinced. We've got some new longs. I mean, we pulled a lot down, so. $14. Who else gets cut? We're cutting you, Tesla. I actually might want to. How's the net option sentiment trend on Tesla? I might close one of those too. Yeah, well, 30 minutes, 15. Oh, God. I think I'm going to close both of them.
Tesla's at 93 right now. It was at 94.
I think we're going to pick it up again. Sorry, Tesla. I do not like that 15-minute trend. We're getting the hell out. I just want to make sure that I'm not losing anything here. Do this right. Boy, poor Tesla. Not a good time to be a Tesla stock owner, right? We are going to. Oh, I really like this run ANET spin. I might add another ANET. We only have one open ANET, right? No, never mind. I don't really like that trend, but I'm still gonna hold it. Don't like that trend at all. But can you tell me what's going on with BKNG net option sentiment?
Sure. BKNG is it's at 78, hitting a new high. Was that 75 this morning? Was that 69 last Friday?
We're getting back in when we close 19 of these bottom feeders, but max N. I'm actually figuring out communication services, IRDM. This is good. But I kind of want to get rid of, we just dropped max N. That's so funny. I think we did. Even if we didn't, I don't know. I don't know if we want, we want to watch that actually. We always have our eye on this one. Okay, we want to be much more targeted. So what do we want? How's consumer cyclical? Oh, we didn't check on this. How's consumer cyclical doing today? Consumer discretionary, down a little bit from where it was, but not tons. Consumer defensive materials, what's going on today? Energy is doing worse. Okay, I know what we want to do. We want communications, consumer defensive, consumer cyclical. Let's look at energy. Let's look at technology. That's all. Let's make sure we have tech. Oh, MQ is all of this. That's really funny. What's going on? IMAX. Hello? Yep, you can send him up. Oh, this is good. IMAX. Go on IMAX. I'm just gonna start cutting these like really like aggressively. CHK. Ooh, EPC, what's going on with you? Personal care company. 3 minutes, 4 hours. Well, that's not doing anything. So we're actually just going to go ahead. We're going to do something very hacky, but we don't care. We are putting in IMAX at the bottom. What's going on? I know that's wrong. And then we are just going to do MKC. Oh no, that's consumer defensive. We want consumer defensive. Okay, then I want to look at it. We're just going to put it down even farther. We want there we go. want? 19, 16. IPG. We don't want this. I know we don't want that. We're going to delete this LPL because I'm glad we didn't add it to the newsletter. We almost added it. Oh, we want to get this. Hold on, I'll be right back. We're almost done, I know.
Thank you to the people that are still here watching this riveting model portfolio update.
I'm almost done.
Looks like George has a guest, but he's coming back.
I do, but we're almost done here. We gotta finish what we started. All right. Is that right? And we're almost done. And this is a great newsletter that I'm very excited about. So we got to finish strong. 20. I wanted to get GSM there. What is going on here? How do I? Oh, I think we decided that this was a cut. All right. Now we're gonna do this, and we're just finishing. We're just getting through this list, and we know about IMAX already, and then we're done. You can't keep me any longer, Steven.
I will announce to our chat though that I believe there's a special AMA live stream tomorrow, correct?
Right? We just keep on bothering you with more of our content. But you guys should come. I mean, I know these are kind of AMAs, but newspapers, we definitely want to show it this. Let's get it healthy. All right. What about that? No, we don't. We're not doing SMPL. The Simply Good Food Company. No, that's not any good. MKC. I don't know about you. No, you're not good. But definitely no. IPG. No, definitely not. Some of these, if you like risky longs. Oh, that looks great. Yeah. Oh, yeah. I hope you sound like a tech company. Newell brands. No, we don't like it. PRDO. You look like you're in a great downtrend. All right. I hope some of these are tech stocks. But yeah, we're not even gonna look. That was enough right there. Send technologies. Yeah, we want technology stuff. SNNC, can you talk to me about the net option sentiment trend?
What was the ticker? SMNC?
SNSC, I believe. SSNC.
Okay. Bad trend, but it was at 10 this morning and now it's at 18, but it's a downward trending net option sentiment.
Look at us go. DQ. Energy Corp. That's a nice downward trend. How about the Ford? We're taking a risk. We're taking a risk because I believe we're more long and short, and we're just, oh yeah, BDD, I hope that we're in. I like that 15-minute trend, however, 5. Great. RSN Verify. Oh yeah, that's a good one too. Well, VRNS. Oh, that was the wrong one. Oh yeah, even better. All right, here we go. This is great. TSN. How many open metas do we have? I want.
I think just one.
It doesn't matter. We're adding one. We're done here. I'm hungry. I need to get out of here. This is over. Quit trying to keep me here, Steven. Are there any questions?
No questions. I'll just tell our chat again, special live stream tomorrow, AMA, I believe it's 2 p.m. And then I also pinned a comment that has a link to our newest blogs and infographics if you guys want to check those out. But no questions besides my announcement.
I'm really happy with the updates we did here. In case you guys didn't know, these are all good. These are very good moves that we make that I'm very keen on. Oh, right before we go, let's just do a quick check on our newsletter picks because I'm also going to give Brent some help in terms of getting this out at exactly 12:45. Oh, nice date for our newsletter picks. There we go. What's going on? Eli Lilly, Melly, let's check them out. I mean, we know what's going on with Eli Lilly, but I'm not ready to get out of it yet. Let's talk about Melly. Maybe. How about our shorts? Oh, these are not updated. They need to be. E is one of them. Let's check them out. Great. Yeah, let's go in that direction. We got to keep our eye on that. SWX. That's not a good trend. We'll keep watching it. Net option sentiment was low. What else do we have open? Navi, and then we have one other. What is our other open short?
Are they open short and what?
Just generally. I think we have a fourth one. I might open up another Navi right now, actually, because I like actually how that's going. The 5-minute trend.
Navi, E, ICLK, and SWX.
ICLK. Yeah, we're opening up a new Navi. And then maybe we're going to open up a new. Later, we'll open up a new. We're doing that. What's the other one I was talking about? I was talking about a new law. But I don't like that. I don't think it's time for the new laws. We're just this QQQ thing I don't really like. But I do maybe want to look at these new shorts. Any one of them, the tech side is. Oh, actually, let's send this because it's time to send it. So we're done with that. And then I just want to look at any of these new shorts. I actually want to go because we're pretty exposed on tech. So I actually want to go and see with that QQQ down, like which one of these are tech. Communications. What did we add on the tech side? I think VSAT. Oh yeah, VSAT was terrible. What is VSAT, right? I think it looked bad. We're opening up a VSAT short. All right, that's all. I mean, what? I'm out of here. I've taken too long.
All right, thanks for everyone watching.
This is your fault, Stephen.
We have a exciting week of streaming and content coming up, and a lot of stuff going on in the stock market. So we'll see everybody back here in the Prospero.Ai live streams.
All right, later. Bye.
See you, George.